Hello, it's Robert Miner with Dynamic Traders Group with this week's trade tutorial video. I apologize, I'm a couple days late getting this available to you. I had some family matters come up at the end of the week and over the weekend, but we got it now, and as usual, we're going to be looking at some data right up to date and some real key potential pattern reversal and trend continuation signals, again, based on the pattern. And we're going to have data up to date with some trades that are either an immediate setup for a trade position or should be within the next few days, again, based on some pattern positions. So let's just get at it right now with pattern reversal and trend continuation signals. First market I'm going to take a look at is the GDX, or the mining stock index. We'll also look at the XAU. They both should usually be in about the same position. We look more at the GDX because that ETF is really easy to trade in high volume. So here's the GDX weekly data right up through the end of last week. So we've had this decline since the February high. We had a distinct one section down, a distinct ABC correction, and then another decline to a new low. We're going to ignore that last bar just for a moment. Excuse me. There we go, just for a moment. So I've labeled that a 1 or an A, a 2 or a B, or a 3 or a C. So is this a correction, or is it the beginning of a bear trend? In other words, 1, 2, 3, or is it an A, B, C? Well, we can look at the data prior to that, and given that this was a 5-wave advance, that should not be the completion of a corrective rally. That should be a higher time frame, wave 1 or A, since it's clearly 5 sections. So that itself would tell us that more than likely we're making a corrective decline. And as of these last bars on the chart at least, we're in a position to have completed just a typical correction to a 5-wave advance, and that's a decline down to the 50-62% retracement zone. And once we reach that retracement zone, our weekly momentums may do a look-back bull reversal. So that itself is helpful information to have, that more than likely a corrective decline is complete. So the key in the lesson, one of the lessons at least in today's video, is what can the market do to indicate that this indeed is a completed corrective low and not a 1, 2, 3 and making a wave 4 correction with a continuation of the bear trend. What can the market do? Well, in traditional, I call it academic Elliott Wave, is that should this market come up and trade into the range of wave 1, just trade into that range, it can't be a wave 3 and a wave 4 correction, because wave 4s should not trade into the range of a wave 1, other than some special circumstances which we call ending diagonals, and a really rare one for a beginning diagonal. We're going to ignore those for a minute because they're pretty rare. And what we're going to look at right now is if we were looking at traditional Elliott Wave rules and guidelines, a trade above 2140 would indicate that this cannot be a wave 3. It could be the completion ABC correction, or at the least is probably some form of a more complex correction. Now I know, again, if you're an Elliott Wave academic, Elliott Wave educator, whatever, you could say that, well, it still could be a 1 and a 2, and maybe that's a 1 of a 3. So I never go under that assumption, because the odds of that being the case are pretty low, particularly if we've just made a weekly momentum bull reversal. We're nowhere near the overbought zone when we got into that range. So I always go under the assumption that once we get that overlap, is that either a correction is complete, or at least it's part of a more complex correction. Now here's where I look at this a little bit different than traditional Elliott Wave. And you've heard about me talk about it a lot in the regular reports. I look for closing, especially on the daily, but the weekly is just a stronger signal. But let's just go through my rationale here. Let's see, that's going to be a green. This is the closing, the weekly closing low of what's labeled a 1 or A. So should the GDX make a weekly close above 2170, to me, that's a firm, strong strong signal as opposed to just a trade above 2140. So that's what I would be looking at in the days ahead. And that's what we have been looking at to confirm if this is a wave C correction. So we're kind of building up a picture here of what the position of this market is. Number one is we got a 5-wave advance. That's probably impulsive wave. It should be a 1 RNA. We should have a correction followed by a wave 3 RSC, probably to a new high. So this is probably a corrective decline. What's this pattern signal that it is a corrective decline? That would be the first warning, at least, would be a trade into the range of the 1RA. That's a trade about 2140, and the firm signal is a close, weekly close above 2170. Let's go to the daily data and see if we can get a little better signal. Well, here's the daily data, that same data, potential 1 or A, 2 or B. Then we got 5 waves to down here. That should be a completed wave 3 RC. So what would indicate that it's probably a C and not a 3? Let me just hit my C key. Let's look at where the closing low is, the daily closing low, and go back to the regular bars. And the first thing I do, I make that thick and I make it green. And if the GDX closes above 2152, it will have closed into the closing range of what I got labeled a 1 or A. And that would indicate that this indeed is an A and a B, and we just completed a C. So that would be the daily close into that range. And really all I look for is the daily close into the range. I always put the weekly close also, in this case the wave 1 or a weekly close on the chart, because if we make that weekly close also, boy, that's a firm signal. Right now, close above 2152, this should be an ABC correction. What follows a correction? Well, continuation of the trend prior to the correction to a new extreme, and that would be eventually probably continue to above the February high. So let's, of course, I don't have Friday's data on it. That's what happened Friday. So more than likely, here's what we got. And the market has shown itself by Friday's close into that range. And you know what I just did? That's not what I wanted to do. We want the A and the B and the C. We've probably completed an ABC correction. And eventually, the GDX should continue to above the February high. Let's just look at a couple more things. Let me go back to the GDX first. And you can see in the GDX we haven't made the weekly close above 2150, but boy, we've closed well into the range of what was labeled the 1 or A low. And so we can go ahead, if we're going to put ABC on the daily, we've got to put it on the weekly, don't we? And that makes that a 2 or a B. We go under the assumption, and we make all of our decisions now as if the higher time frame trend is bullish, eventually going to continue to above the February high. So let's take a look at where we're at now. What should the GDX not do if the higher time frame trend is bullish? So again, we're basically going to look at the same thing we just looked at. If the higher time frame trend is bullish, what should the GDX not do? I'm going to hit the close only key. I'm going to draw a little line across there. I'm going to make it thick, and I'm going to make the color is red. It should not make a close below 2093. So then we also want to put, I always get a little bit of everything here, that little swing low. I'm not going to make that thick. I'm going to make that, but I am going to make it red. Should not close below 2093. So if by chance the GDX closed below 2093, that would be a warning that this was not the beginning of a bull trend. And maybe it's some sort of correction. Certainly the definitive signal would be a trade below the swing low, but that's a strong enough warning, close below 2093, that I would abandon any bullish strategies if we made a close below 2093. So where are we at right now? Boy, this big day up. Let's just say we hadn't bought prior to this day up, and even though we were waiting to do that, should we be kicking ourselves? Well, this is only the first few days within potentially a major bull trend. So, of course, now we do what WD Gann said, and we wait until the first correction against the new trend. That's the safest time to enter. Now, if we more than likely we're going to have what we call a daily top in the next couple of days. The daily momentum's bullish, but the fast line is overbought. Warns we got a daily high coming probably in a couple of days. And we got some time factors. Here's just a simple high to high time factor on Tuesday the 4th. And we can just look up here and see, between every about 11 and 13 days, we've had at least a daily high that's lasted for several days. And that's probably coming. What a great trade strategy we can set up right now. We don't have to then guess in the days ahead. We just wait and see if the factors are fulfilled. And that is if we get the next daily momentum bull reversal if price is not closed below 2093, that's our letter to Santa Claus and the ideal setup to initiate a long trade for a continuation of the bull trend. We would not have voided the pattern, the bullish pattern, and we will be, and that setup is made, will be dual time frame, daily, weekly momentums bullish to continue the bull trend. Whatever price is at the time, just as long as it hasn't closed below 2093. So as we can see, the pattern position helps us to determine the degree of change, the probable pattern of the change, whether it's a correction or an impulse trend, and what the market should not do if we're correct about identifying a probable continuation of the bull trend. So here's gold. Gold looks a lot like the GDX. And of course, by the way, the XAU is in the same exact position as the GDX. I just like the GDX. I think it's a little more liquid, and plus it's the one market that we use in our trade alerts reports when we want to be long the mining stocks. Okay, here's gold coming off the February high. Well, we don't have that nice clean ABC correction, a potential correction at least like we did in the GDX. This is very much a corrective pattern, overlaps, etc. But here we are, very similar to what happened to the GDX in the last few days. So a couple things happened. Number one, we never made a new closing low. There we go. I'll put it on close only. We never made a new closing low at this point. And we've now closed above the closing high, the last swing closing high. So that itself is a strong indication that we've shifted to a bull market. But let's just do like we did with the GDX. Let's identify what the market should not do if the higher time frame trend is bullish. Again, back to our close only, and we'll look at this initial closing high like so. And if we look at this as a 1 and a 2, the beginnings of a bull trend, sure looks that way to me, I hope it does to you too, is, I just like to get the nice cleanly labeled. Gold should not close below 1291. Very important. If gold closes below 1291, more than likely this is not the beginnings of a bull trend. More than likely it's part of an ongoing complex correction, and it's going to make a new low. So we've got just what a fantastic potential setup with known parameters coming up. Now, in the next day or two, we're likely to make a daily high. Daily momentums are overbought. We've got some key time factors between late last week and early this week that we ought to make a high that's going to last several days. Once again, the next rotation and the next bullish reversal in the daily momentum, if that's made and gold has not closed below 1291, that's the ideal textbook setup. to continue the bull trend. And not just because the daily and weekly momentums will be in sync to continue the bull trend, but because we have a really, really firm pattern position that indicates we've shifted to a longer term bull print trend, that we've completed this correction. And if we completed that correction, boy, there's a lot of possibility on the upside. So we just wait for the next daily momentum bull reversal, probably several days away, near the end of next week or maybe the following week. And if that bull reversal is made and price is not closed below 1291, fantastic go long setup. Well, that's it for today's tutorial. And we can apply what we learn here in other markets and other time frames. And of course, during our regular reports, I refer to these kind of setups as well. Now you got a little more firm background to them, so I can go through them really quickly when we see them day by day in our regular reports. Take care. Have a fantastic week.